Wammie and Moolah trades. Wammie trades are very simple trade setups. These trades that will only occur on a support or resistance zone. The Wammie setup is like a double bottom. However, the trade formation has very distinct differences. The basic pattern is this. Price comes down, usually from an extended downtrend, and then price is rejected at the support or resistance zone. Price moves upward, and then price comes back down to touch the support or resistance. The Wammie formation looks like W. However, it has an important difference. The difference is this. The Wammie trade is a double bottom in which the second bottom is higher than the first bottom. Wammies will have the following characteristics. A Wammie will always have a higher second bottom. A Wammie will always form on an important support or resistance zone. A Wammie will often form with a bullish candle on the second bottom. So, the stop loss is placed below the first bottom of the Wammie formation. If the market goes lower than the first bottom of the Wammie formation, it is invalid and the trade will end in a loss. You may decide the best place for a profit at is near the most recent minor support and resistance zone. The two green shaded areas indicate a minor support or resistance zone. This is because price has paused at this level from above and from below. It isn't a major support or resistance zone because price is only caused here with a few bars. But if you examine the same area on a lower time frame chart, you will see that many bars have touched this area, and that is why it is considered a minor support or resistance zone. The point is this: when looking for a place where price might pause, always look to support or resistance zones. The Moolah trade. Once you are comfortable with the Wammie trade, you will find it easy to understand the Moolah trade. The Moolah trade is the opposite of the Wammie trade. As you may have guessed, the Moolah trade is a double top or an M formation. As with the Wammie trade, the Moolah trade has several important characteristics. First, price has been traveling upward. Second, price touches a support or resistance zone once and then retreats. Flared price goes upward again and touches a support/resistance zone once again. The second touch of the support or resistance zone is lower than the first touch. And finally, we see a bearish candle price after the second touch. This is the entry signal. When taking profits, you should always look to the nearest minor support or resistance zone for a place where price may pause. These are always good places to place your take profit. In this case, you can see that price is indeed paused at the nearest minor support or resistance zone. Recall that we will put the stop loss a few pips above the highest top, which will always be the first top of the Moolah trade. Managing exits. Sometimes it is difficult to watch a trade run in the expected direction after you have exited the trade. One way to get around this is to decide that you will take 2 exits. So, at the outset of the trade, you decide that you will take 2 exits. The first exit may be placed at the nearest minor support or resistance zone. For the other position, you may move the stop loss to break even once the first take profit area has been in. This way, you can ride out the bulk of the move. Like the trade? Show some likes and subscribe.